Assalamualaikum and hello everyone. My name is Fatin Azbran binti Azlan and my matrix number is 314181. Today our group, which is group 7, we will discuss the accounting issue faced by Apex Holdings Berhad involving the plantation division, real estate division and food manufacturing division. Our discussion focuses on the appropriate MFRS treatment and faithful representation.
Assalamualaikum and hi. All palm trees and FFB are accounted for under different standard because they serve different purpose. All palm trees are berry plants under MFRS 116 since they are used to produce FFB over many years and are not intended for sales. In contrast, FFB are biological assets under MFRS 141 because they grow through biological transformations and will be harvested and sold. All palm trees are measured at cost less accumulated depreciation and impairment loss, while FAB are measured at fair value less cost to sell. These distinctions ensure the financial statement fairly represents the company assets. That's all. Thank you for me.
Assalamualaikum, my name is Irfan Bromat. The CFO valuation comprises the three characteristics of faithful representation, completeness, because it's ignore biological risk, and the maturity stage of the FFB. Maturity, because the CFO wants to report a higher profit and attract investor, and free from error because a mature FFB is valued using the market price of harvest FFB. The CFO values a mature FFB using the price of harvest FFB. However, the mature FFB is still growing and cannot be sold yet. Its value is uncertain because of risks such as weather, pests, and diseases. Therefore, immature FFB does not have the same economic value as harvest FFB. Faithful valuation approach is to use fair value less cost to sell. The company should consider the maturity stage, expected yield, biological risk, and selling cost. This provides a more accurate valuation and complies with MFRS 141.
Next, I will discuss the ethical issues faced by the professional accountant in plantation division. First, there are several ethical risks when complying with the CFO's instruction. The accountant may compromise integrity because using the full market price of 650 ringgit per ton without considering biological risk may result in overstated asset and profit. It may also affect professional objectivity as the accountant is pressured to follow management interests rather than making an independent judgment. This could lead to professional misconduct and affect public trust in financial reporting. Before raising concern internally, the accountant should first gather sufficient evidence by reviewing the relevant accounting standard and valuation basis. Then, the issue should be discussed professionally with the CFOs and advice should be obtained from appropriate parties if necessary. After raising the concern, the accountant should document the issue, escalate the matter if it remains unsolved, and continue to consider their professional responsibility. Lastly, accountants have obligation beyond the company itself. They are responsible to external users such as investors and shareholders because these users rely on financial statements to make decisions. Therefore, maintaining accurate and reliable reporting is important to protect public interest and the credibility of the accounting profession.
Hello everyone, today I will critically evaluate the correct accounting classification for the three properties in the real estate and property division. The main principle is that property must be classified according to their actual use and business purpose, not according to management purpose. Therefore, the CFO proposal to classify all three properties under MFRS 140 is inaccurate. For property 1, the corporate and retail tower, the estate should be split because 7 floors are leased to external tenants and should be classified under MFRS as investment property, while the remaining 3 floors are used as the company headquarters and should be classified under MFRS 116 as property, plant and equipment. For property 2, the horizontal land plot should be classified under MFRS 140 because it is currently held for long-term capital appreciation and its future use remain undecided. Finally, property 3, the Zenith condominium should be classified under MFRS 102 as inventory because the company business model is to construct and sell the unit to customer in the ordinary course of business. In conclusion, applying the correct MFRS standard to each property ensure accurate, transparent, and compliant financial reporting.
And initial measurement for all three properties are measured at cost. For the subsequent measurement, property 1, investment property portion, and property 2 may use the fair value model or cost model under MFRS 140, while the owner occupied portion of property 1 follow the MFRS 116. For property 3 is measured at the lowest of cost and net realizable value under MFRS 102. The CFO proposal to apply the fair value model to all three property violate the faithful tension because it is not complete, not neutral, and not free from material error. Each property must follow the appropriate MFRS based on its actual use to ensure the financial statement fairly represent to the company financial position.
My name is Fatin Nur Nabilatul Alfa binti Rosmai Zainif and my matric number is 313812. I'll be present the case study for the food manufacturing division. So for the food manufacturing division, under MFRS 137, the company should recognize a provision of RM1 million for the product recall because there is a present obligation. The outflow of resource is probable and the amount can be estimated reliably. However, the consumer lawsuit should not be recognized as a provision because there is only a 30% chance of losing the case. Therefore, it should be disclosed as a contingent liability in the notes to the financial statements.
Okay, for the last question, under MFRS 137, uncertainty determines whether an obligation is recognized or only disclosed. For the product recall, management estimate that 70% of the product will be returned with an expected cost of RM1 million. Since the outflow of the economic benefit is probable and can reliable measure, a provision should be recognized. However, for the consumer lawsuit, there is only 30% chance of losing the case because the probability is low. It does not qualify as a provision and should only be disclosed as a contingent liability in the notes to the financial statement.
In conclusion, the case study shows that applying the correct MFRS standard is essential to show a correct and reliable financial reporting. Companies must classify and measure asset and liability based on the actual economic substance, not to increase profit or attract investors. By following professional ethics and the relevant accounting standard, Apex Holding Berhad can present financial statements that provide a true and fair view to all stakeholders. Thank you.